Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
On today's show, Mac Thompson, CEO and founder of White Clay, that's a company focused on helping financial institutions use data to build better, more profitable member and customer relationships. But know that Thompson comes bearing a bitter pill for CU executives to swallow, a very bitter pill. That's because, according to a recent Harris poll sponsored by White Clay, quote, roughly 2/3 of FI users, 68%, do not feel truly known by their primary financial institution, with almost a third, 31%, feeling like just another account number, close quote. Surely credit unions pride themselves on their member relationships, do better, right? Surely they do. Yes, but hold your self-congratulation. The number for credit unions is 63%, said Thompson in the show. 63% of users who truly do not feel known by their primary credit union. It gets worse. 41% of members say they would switch to another institution if it offered more personalized financial guidance. But Thompson also has good news in the show. Institutions can harness data they often already have on hand to enrich their personal relations with members. He discusses this in some detail. Listen up. We talked a few years ago, and the question I have for you is how are your, and try to answer it honestly, how are your sales going? And I ask because all anybody in computer land wants to talk to me about is AI. Yep. And they don't seem to have much bandwidth for any discussion other than AI. Are you encountering that?
No, we've been, just on the AI topic. So large language models became super big, right? Year and a half ago, something like that.
Out of nowhere, as far as the general public was concerned. Google had been working on that stuff for 10 years before.
Oh yeah.
But so, this was like an explosion. Everybody, it's like when Netscape came out. Everybody, I got to get Netscape. Got to.
Yeah, so, but I kind of reference, like when people ask me about AI, Netscape's a good analogy. It's kind of like 1994 in the internet. There's a ton of hype at the moment, but there's for large language models, there's, other than personal productivity, there's not a tremendous amount of practical use cases with high ROIs yet. I think there will be. I think we're early in the game, but there is a tremendous energy around it. We've been using other areas of AI for years, as the industry has itself. So in terms of predictive models, in terms of using large data sets to, translating them into English using, we've been doing all kinds of AI things for a while. It's just the large language models have took a lot of interest. But in terms of sales, we actually are having a great time. We really focus on doing relationship banking, how to deepen and improve the profitability of relationships, which with the move back to more balanced, where people are looking at loans and deposits and relationships, we kind of fell into kind of a sweet spot of what we do. So we're doing pretty well on the sales front. Having a lot of interest in in banks and credit unions in the, particularly, we get them across the board, but particularly in the $5 to $20 billion space, as people are scaling up their organizations, as they're acquiring other entities, either that credit union or a bank. A lot of credit unions are buying banks, which is interesting. But no, we're having a lot of interest, and we're doing pretty well on the sales front. We do have a lot of intelligence. Yeah,
that's an interesting point. Certainly there's an explosion of credit union mergers. And anytime you acquire another institution, and there always is an acquirer and an acquired, it's always. the existing members in the case of a credit union, half of them were sitting there saying, should I change this institution? You have to really build relationship with these people once you've done an acquisition. It's preferably, you got to start on day one to build relationship. So, and you have some, as you know, every credit union person will say to you, hey, one thing we excel at is relationships.
Yep.
But you have data that says 68% of FI users do not feel known by their primary financial institution. Nearly a third feel like just another account number.
Yep.
Those are kind of damning numbers. And I assume they apply to some extent to credit unions too, not just banks.
Yeah, the credit union number was about 63% in this.
Hey guys, you're doing a little better.
But one of the things we also do customer experience measurement. We didn't use our own services to this. We use the Harris poll. But we also do customer experience measurements for credit unions and banks. And one of the reasons why we did this survey using a third party was we wanted to take a look at it from what a member or a customer thinks about how they see it from their perspectives. Most of the customer experience surveying that we're doing is answering a credit union or a bank's question how they think about customer experience. What's my top $2 score on this transaction? What is this? What is your likelihood to recommend? They aren't asking the members or the customers from their perspective, do you feel like you're getting this personal treatment? So we decided to take it from the other perspective. And the results, the number, 68% overall was much higher than I thought it'd be. I thought it'd be higher than we would have all thought it would be, or the credit unions and banks think about it. But it was much higher than I thought. And it probably also has to get fed into that in the economy. We were kind of in a two-stage, a bifurcated economy. There's an economy where people who own a lot of assets are doing quite well, but those that don't have assets are kind of struggling. And I think some of that carried over into the survey would be a guess. Until we get into focus groups and get into some of the qualitative, I don't know the answers exactly to that. But I think some people are struggling, and that struggle brings frustration probably to the relationship with their credit union or bank. So there's an element of that, but still, for a group, most all banks and credit unions, we'll talk about relationships that are blue in the face, but when you actually ask their members and customers, they don't have the same opinion, which I thought was, the last section of that I thought was just crazy was, 50% would actually, total institutions, I think credit unions are about 44%, would be interested in switching if someone could actually deliver a true relationship experience. And I think that is a tremendous opportunity for credit unions out there.
Now, what I hear, and I don't know this from personal experience, but what I hear is that some of the neobanks and non-banks that provide something that looks like banking services, essentially computerized companies,
yep,
are actually very good at delivering service. And even though it's you're dealing with machines, but the machines are smart machines. And I think Amazon customer service is quite good, and it's become more and more machine driven. It's
it is till you have a problem. Like Amazon, if you really run into a serious problem, Amazon can be, I'm just my own personal, so I don't have a survey to back this up. It can be challenging when you have problems. And like in banking in general, credit unions is a part of this, just overall financial services. When customers have a problem, they generally don't want to talk to machines, they want to talk to a human. Because usually a problem being defined as something that probably involves money and not a small amount, right? So it's something material to them, and it's probably got a time consideration to it. And when surveys I've seen from very like Gartner, McKinsey, various places, basically have indicated that when you have that problem, they want to either talk to someone or go see someone in person. It doesn't happen as often. That said, the counter is when they're doing like the larger national banks, some of the very good tech banks, I think their customer service around transactional behavior is better. So when you're doing that transaction, they make it easier. And if you need some help, some of the transactional stuff I think is better, but when you actually run into a problem, it can be arduous. And I think that's part of the reason for the opportunity. But, I just say this, most financial institutions talk relationship all day, but most of the things they focus on are transactions. They're selling them a product, fulfilling a loan need, doing a deposit transaction. It's more transaction-oriented relationship. And I think the tremendous opportunity is around building those actual relationships where a combination of people and technology probably is the most effective.
Now, how do you advise or help a credit union to actually do that? I mean, as you say, and I know this as well as you do, they all talk about doing it. Many of them think they're doing it, but how do you go in and say, okay, here's what you really have to be doing here?
I'll give you a tactical example because I think it kind of illustrates the point. A credit union we were talking to out there, they were communicating to us they had a real problem with active debit cards. And we drilled into it a little bit further, and they were making a huge strategic initiative to get more active debit cards. They thought that would really help them financially, also help their members. What we found was, though, is what the real issue was when you looked at the overall relationship, those where they didn't have an active debit card, those that had an active operating account, meaning that they're doing transactions, they have that operating relationship. They had about a 95%, 98%, but very high number active debit card usage. It turned out, though, that only half their customers had this. And the other half, where they didn't have active debit card penetration, was where they were the secondary bank in a secondary kind of relationship, or credit union in this case, and their primary financial institution was somebody else. The fact that they were trying to product push the active debit card gets around that transactionary thinking. We need to sell them, we need to get them to use something else. If they had thought about the relationship and asked some basic relationship questions, they would quickly have realized the reason we don't have an active debit card is we really don't even have an active transacting relationship. And we really, other than a loan, we really don't have a relationship. We have a loan product with them. And if we want to build that relationship, we can. But it's that, so first place, to answer your question, the first place to start is put together the information so you can understand your members, but you can also understand how the total member relationship works. A lot of members are based upon tax IDs. It's just kind of how the counting of membership works. But the reality is that relationships are made of multiple of those, and you need to first put them all together and understand what that relationship looks like.
Now, have you done any work with a credit union that wants to get more activity out of indirect auto loan members who often only have an indirect auto loan? And then if they were forced to open a share draft account, they did, but they parked like $5 in it. And,
at point of sale, there's opportunity. So as you're opening that indirect auto loan, there's some opportunity to I would call activate that checking account they were required to open. If you've waited past that opening window, it is very hard to translate that into a relationship. It's not impossible. It's better than a raw prospect, but it's not. I wouldn't consider it a relationship account. Now, if you have if you have an indirect auto and you have a home equity and you have some other lending things, but maybe not the operating, that's a little different. But if you're just talking about the single indirect auto, loan instrument, and that's all they have, unless you opened up the front of that, it is hard to deepen that later. I don't know if that's your experience or what you've heard.
No, I haven't heard that. Mainly, I've heard failure stories on the part of credit unions.
Oh, yeah, they tried a lot, right? But it's just if you think about it from the members' point of view, they really don't think of that credit union as their financial institution. It could be another credit union, it could be a bank, could be whomever. But they are just whoever they pay for that car loan that gave them a good deal. So they just don't think of them that way. And so when they get the offers, it's it just wasn't part of the buying decision. They were buying, in this case, they were buying a car, and someone, through the dealer, They got a pretty good deal in the financing, and that's what they went with. But it was more transacting, not a relationship.
Sometimes it does work, and you already suggested that big banks sometimes are good at this. I'm remembering the one time I got an indirect loan through a dealer. I walked in with a pre-approved thing from a credit union. Without even looking at it, the dealer said, I can beat the rate. And I said, really? He said, the 0% sound good. I said, yeah, you beat the rate. And it was Chase. Chase was carrying the paper for Subaru. And I eventually opened a checking account with Chase,
Yep.
a savings account, 2 credit cards, and somehow they painlessly marketed me into those things.
Did it occur within the first 3 months or so of opening the loan, or was it after?
And it occurred gradually, really.
Okay, well, good. Good for Chase. Just from experience I've had is that it's not usually as effective with the smaller banks. Credit unions, it may have to do with targeting capabilities the larger banks have nationally. That it's a combination of who knows. But just with the credit unions and on the small, like community bank side, it usually isn't the first place I would spend dollars if you were going marketing wise. But not saying you couldn't try. I want to say this: the Nationals, they're targeting you could call it AI, but their analytical capabilities and targeting model capabilities are just are insane. And they're doing things 20 years ago that a lot of the community and credit unions aren't doing today. And what they're doing today, I don't know because I'm not there, but it has to be significantly more advanced than it was. But they've also just got massive scale, which is very helpful. I mean, when you're $3.5 trillion, it kind of helps you on scale.
Well, they also have a ton of money, and they also have tolerance for economic failures that would freak out the average credit union.
Oh, completely. On a percentage of campaign success basis, the net math, we have more campaigns that fail than probably win, but the ones that win big enough to justify the effort, because you don't know which of those 100 variations you're trying are going to be the right ones, right?
And I'm sure
Won't
Chase
you?
has AI projects that have failed,
Oh yeah,
that have cost many millions of dollars, but no one's paying any attention to the losses. They're just looking at the possible upside.
I mean, I would suspect Chase's AI group is bigger than most banks and credit unions in terms of what they spend. I mean, not just their AI groups. I mean, the total, a credit union or bank has 250 people. I mean, Chase probably has thousands of people working in AI right now. When this is 25, 30 years ago, when online banking became a big deal, someone was trying to argue that they could create better online banking than B of A or Chase. I happened to be at B of A at the time. And one of the things I looked at, I said, well, I guess it's possible, but just understand that your bank has 400 people in it, and B of A's online banking group has 2,500 people in it. And a better ROI probability is that you're a fast follower. You learn from their mistakes, figure out what they figured out works well, figure out how that works for your credit union, and then apply that. But just don't try to out R&D them. I guess it's conceivable someone might be that innovative, but it's not as probable.
Hey, my first online banking account was with B of A, and I distinctly remember that there was a cost per transaction, and it was pegged to the price of a stamp. So I forget what postage cost at that point. So, but when you paid a bill, you paid like 27 cents or 30 cents. It's and I didn't complain about it because I said, hey, stamp's going to cost me the same amount of money. Why complain? Yeah. And this is so much cooler. Yeah, I was actually a happy B of A customer for some years with their online banking product. It was a good product.
It was. That was you're talking about the check-free relationship with online bill payment.
Yeah.
So,
well, I'm an old guy. I go way back. Hey, I had a 300 baud modem, man.
Yeah. It's probably I got into computers in the late 70s. When I was really young, I got into computers, and we were doing stuff on CompuServe in the early 80s.
Yeah.
And pre all this fun stuff, and it would be unimaginable, I think, for like my nephews to go back and look at what we were doing, because it would just be inconceivable to them. What do you mean this thing only transfers data at 14K a second? But it's
Yeah,
kind of,
also, I had an early CompuServe account too, and I distinctly remember when they introduced email, but there was a fee attached per
yeah.
every email, which is it's fine by me. I wish there were a fee attached, so I get a lot less of it.
It is well, you're actually getting into one of the challenges with the technology, and in some ways how it negatively impacts credit unions' ability to deal with this is the technology is producing insights, analytics, whatever you want to call them, so fast, and they're not necessarily prioritized, and they're not synthesized, and so the frontline folks are just getting swamped with volume, and they don't know how to handle it or how to prioritize it, and it's really distracting them from doing the things they would probably be better at doing. And I think it's a challenge, for credit unions, banks, probably the whole, world actually. But it's something it's probably the next phase of this is how do you make this much more actionable? All of this intelligence that's being created, and and I think that's probably one of the next evolutions of all of this. And I think the large language models, it's probably their next challenge because, initially it was pretty cool that you could write a story, to give to your kids to read a nighttime story, right? And you just ask AI and it would generate a story, and that's great. Help you write a first version of a memo. That's great. But how do those large language models were trained on the internet. So they're basically what you're getting is an average kind of level output from what it was trained on, which is internet. How do you get to the next version of this, which is which provides that prioritization, which augments and helps the human in the loop do more and increase the overall level of productivity while also creating value for the member or value for the member, for in the credit union cases for the member. I think that next evolution is probably what's going to make the ROIs and these things get a lot better. Because they're cool now. I just don't know if the ROI is awesome.
Well, I think possibly the lasting impact of LLM models is going to be how people query the computer for information. Yeah. I mean, I'm an old guy. I remember with Google, Larry Page told me, well, it works a lot. And this was like in 1999. Use Boolean. It works better. A few years later, Google said, hey, you don't need to use this Boolean stuff anymore. Just ask an ordinary language query. But with ChatGPT, you can get more personal. I'm a 17-year-old high school senior doing a paper on ethics. What are the important points for me to know about? And it will actually give you information that attempts to tailor to your wants.
When I first saw ChatGPT, my initial response was, Google has a problem in 3 years. Because if you can interact with like you do with ChatGPT, what is the traditional version of Google? Is that useful? Right.
Well, I think the people who have a problem are the magazine, newspaper, etc. publishers, since Google has links, but they're buried at the bottom of the page, whereas historically they came back with those links at the top of the page. Now they have a summary. It's really bad for clicks for publications, etc. So,
oh yeah. Well, I mean, you got two parts to that, right? You've got the whole Google search ad model, which is kind of a problem, which is one side of it. The second side is how do you protect your intellectual content? Right. Who's going to stop the LLM models from using your writer's output to train its models to mimic your writers?
But let's take me through. Okay, big companies have always been using data analytics in what they're doing. I mean, an example I give is that 20 years ago, if you had taken my American Express card, gone to, and I'm sure it didn't exist, an Apple store in Detroit, and tried to buy an expensive computer, Amex would have denied it because I'd never been to Detroit and I didn't shop at Apple stores. Simple as that. And that was a function of data analytics. But could the average bank or credit union do that kind of data analytics 20 years ago? No way. Absolutely not. Yeah. So these big guys have always been using data analytics to know something about me. And how does a credit union get in that game? How do they use the data to know more about me? And they should. if I have an active Visa card, you know where I shop, you know where I buy groceries, and you know a ton of stuff. You just don't know that you know it, and you don't know how to use it.
I think the key for if you were a $5 billion credit union out there is it's just not a technology question. It's a organizational culture question, business process as well as people. So it's everything that goes into your credit union. And what you really have to evolve your credit union to be able to think and to be able to use this. And so it's not a destination per se, it's more of a journey, and that you've got to start small and then build, because those giant banks you're mentioning didn't start where they are now, they started somewhere else. So first thing is you're gonna have to start. You're probably gonna have to partner with somebody, but it is more than just buying the technology. If you just buy the technology without changing how your people, processes, how you run your credit union, you're really not going to get benefit from it, because what you're trying to do is take all this information and force it through your old, I call them cow paths, right? It's where the animals used to wander through things and people built roads on top of them. Sometimes it worked great, sometimes it didn't work great. But what you've got to do is rethink how your business should function given these new insights and things. So you got to evolve with that. And some of that's evolving people's capabilities and those kind of things. But the good news is you need to start. The other good news is there are partners out there that can help you along that journey. Trying to do it yourself internally, it's a choice. But if you could find a partner that's been down this path hundreds of times, that's probably going to be a more likely success story and probably a faster success story. Doesn't mean you have to find the right partner, though. You got to find the right partner also for your credit union, because there are people out there that will sell you some technology and not know how to integrate it with your credit union, and that won't be very successful. It's about people and technology working together.
What new technology does the institution need? I mean, the data exists. The data is on their core. It's on their credit card systems. It's in there.
Yep.
Which is a wonderful thing. It's like telling you, hey, I know somewhere on your 1,000 acres of property, there's $1 million that was buried by a bank robber. I know that, but I don't know where on the 1,000 acres. So have fun looking for it.
So this is kind of done in parallel. You're going to need to start building out your data capabilities. And some of the challenges for that is if you're not used to doing it, it's pretty challenging because you might start, if everything's on your core, right, regardless of where it is, that's one set of challenges. But it's probably not like that anymore, because now you have your credit card system, you have your merchant platform, you have all these various different systems that you've gone out and bought to deliver awesome products for your customers. But now they all have to be integrated. And that in of itself is a challenge for most folks. You first start off with, I'll just kind of general steps. How do you build all this data and compile all of it together? And that's probably one of the steps. Second step is how do you add and this is more on the technology, but this is so the first one's more about data integration. But the other thing is it involves people actually understanding what that data means. So data isn't a technology project by itself. It's actually a technology and business project. Because if you just literally combine all of these things, but you don't know what it means, you may get wrong answers. When someone says interest rate, what is an interest rate? Well, depending upon the question you're trying to answer, there's about 12 different versions of an interest rate. And so you need to have the business people to be able to be sure to align all those things. But first step, integrating the data, putting it all together, and being able to see a total member relationship. Second kind of stage is adding intelligence to all of that. What is their transaction behavior? What does that tell you about them? What are the insights from that? What does the overall relationship look like? What kind of relationship do you have? The third is being able to figure out so what? What do you do with all of that? And do your people and processes, are they built, are they evolved to be able where they can handle that? Because like I'll give you an example, because we have a product that basically will go through all the transaction data of the clients, figure out all kinds of things about them, and come back and tell you these are probably the 4 or 5 things you should talk to the client about. if I were to hand that off to an organization that doesn't have the ability to do anything with it, it doesn't do anything. So because that's what I'm describing technical wise is a pretty advanced capability. But if I were to find an organization, develop an ability to talk to customers or members on a regular basis, and have those core capabilities built out, they can leverage it. But without some of those people capabilities, there's nothing you can do with it. I don't know if that helps. The last thing is the ability to prioritize all this and to focus on what makes sense for your credit union and what you need to do to maximize member value. So really all four of those together.
In the show we did a couple of years ago, which I listened to yesterday, you made a fascinating point, which was bankers, credit union executives, they think everybody wants fewer NSFs. You said, au contraire, there's a certain kind of individual who's often very high income, small business people, doctors, lawyers, whose cash flow is a little irregular, and they just view NSFs as just part of living.
Yep.
And they don't mind paying the fees. And the one thing they don't want you to do is call them up and nag them about their NSFs.
Yep.
Now, you say that to the average banker is going to say, that's not possible. Everybody wants no one wants more. No one doesn't care about NSFs. No, these people don't. And they're not people going down to check cashers and places like that and taking payday loans. No, they expect you to make sure their bills are paid, and they'll pay whatever fees are involved in that. It's cool. They got the money will come in. Now, how do you get that financial executive to understand the psychology of that kind of customer, or any customer who's not like them?
You're talking about a challenge in the industry. So one of the classes I teach for the American Bankers Association. I teach a class on price and profitability at the graduate school. And a whole section of it is most bankers like to think are pretty numbers oriented people, probably have some, they like accounting or finance, but most of our members and customers don't think like we do. So you've got to begin to thinking about the voice of the customer and how they think about things. Because if we're successful, we are solving our members' problems and letting them achieve what they want to in their lives. And doing that means we're going to have to interact with a bunch of people who don't think like we do. If you were to tell someone there's a member out there that's spending $2,000 a year on NSF fees, we would want to call them and help them not spend $2,000 a year on NSF fees, right? Because it's completely irrational to us. From the example you just provided, but in order to successfully partner and build a great relationship with them, we need to build a better understanding of how it is they think, not necessarily imposing how we think on them. And that financial empathy is a big gap currently in banking, in credit union, financial services. It's just we think people think like we do, and most people don't. But that financial, it's kind of, I just use that term for the first time. That financial empathy, though, is, I think, something that could really do. It's one of the reasons in the survey, if you want to think why 68% don't really feel their financial institution knows them or, has a relationship with them, it's because the member doesn't believe the financial institution understands them. And understanding them isn't just about how many checks they write and how many accounts they have. It's about how they feel about their finances and how they think about their lives. And
the member is probably right in that thought. That's the horrifying thing.
It is, yeah, 100%. He, she, or they're really frustrated by it because they don't get up. Most people don't get up every morning and think about their financial services provider, right? They don't think, oh my God, let me talk to my credit union today. They want to live their lives, and the credit union or bank is a partner in that. And as long as that's going well, not on the top 100 things to think about. But if you think about if the credit unions thought about it differently, and they thought about how could we get up every morning and figure out how to help our members win and achieve what they want to in their lives, it's just a very different way of thinking about it. It's much more relationship way. It's not so much focused on those transactions. But I think it's a huge opportunity. I think some of the tools coming up probably can help. But if the credit union doesn't want to focus on that and focus its people on that kind of behavior, you're not going to get there. There's not a silver technology tool that's going to all of a sudden make you do what I described. Tools probably help, but I think it's a huge opportunity in the industry. And I think it's a huge opportunity just for people in their lives, right? Wouldn't it be great if your credit union or your bank was someone that you actually thought helped you get through the day and makes every day easier?
Well, I think this is a parallel concept. One of the things we're seeing in fraud is that more and more consumers, I'd say the overwhelming majority, say, don't try to teach me about fraud. You find ways to prevent it from impacting my account.
Yeah.
And I think that's perfectly rational because the fraudsters have gotten pretty smart. It's you're playing a game of chess with somebody who's good at this game of chess, which happens to be thieving. It's and so why should I spend my time trying to outwit this person? My financial institution should do it for me.
Yeah.
And some of them do. I mean,
I think you're on the fraud front. You're talking about AI engines versus AI engines, right?
Yes, that's what it is. It's spy versus spy, the old Mad Magazine thing.
100%.
But now it's computer versus computer. One in a white coat, one in a black coat.
I remember the cartoon. But yeah, that's that. There is one piece of it I don't know how to solve. It's the social engineering of fraud, where people are, they do a phone call. It's that social engineering way of hacking, and that involves that's hard for the banks to solve because it's relying on the members' social behaviors to interact in certain ways to open the member up to fraudulent activity. The bank isn't really involved in that interaction until it's too late.
So yeah, sometimes customers are not going to do the right thing, even if you try to. You can lead them to water, but you won't make them think. But
yeah, but back to your original point on this. I think you're right though. Is it reasonable the customer would think the bank would be applying advanced analytics to help reduce the fraud?
Well, Visa and MasterCard do that.
Oh yeah.
American Express does that. They're already doing it, and they've been doing it for as long as I can remember, 20 plus years. It's
one of the things on my Amex card, and I've used it for over 30 years, was anytime I called them with a problem on it, basically the short version of it was they said, "Thank you for letting us know. We'll take care of it, and we'll get back to you when it's resolved." And that's a great feeling to have when you're using, I'm just doing a sales pitch for Amex, but it just was that's one of the reasons I still have the card. I don't have to worry about it, right? They've got this, and if there's a problem, they'll take care of it. Now, if that ever changed, my value proposition for Amex would be very different, right? Because it's not an inexpensive card, but it gives you lets me do what I need to do during my day, and I don't even think about it, and that's got value to me. On the fraud front, like going back to the listeners on the podcast, I would partner with somebody because there are some great. I'm not going to pitch anyone, but there are great partners out there for the fraud aspect, and they've been doing this for a long time. And I would definitely wouldn't try to build internal on this. I would partner.
Well, and you've made the point, and you're absolutely right that the fraudsters are active consumers of the very best AI products out there. And if you want to fight with them, you have to be an active consumer of similar products. You absolutely must, or else you're going to lose.
Yeah, and that's what it is. On the other front, bigger picture, data is where I would probably, but you first need to start with just a high level plan and don't try to bake, the perfect dinner. Just figure out, here's where we're going to start, and here's a path of how we're going to go, and just start the process. Data is a piece of this, but you've also got to figure out, how to bring your team along with you, how to help them understand how to better use this. And, that takes a while. The people part of this is actually usually when we partner with banks and credit unions, the people aspect is actually the longer window than the implementation. We have the software up and, small regional community credit union, 90 days. Getting them to fully be able to use it as an organization may take you a year or so. just because the people aren't familiar with these things. They're not exposed to them. And now they are, and that's change, and change takes a while. But I just think that there's a lot of folks that want to kick off some 3-year data project incorporating a whole bunch of expensive technology. Probably not where I'd start. I would start with find the right partner to help guide you along this path. And you probably want people that have worked with some of the larger places because they have exposure to things from multiple decades. That if you only have people that worked with some of the smaller credit unions and banks, they may not have had the same duration of experience. I just was thinking about as we were talking about fraud. Could you imagine if a $2 billion credit union wanted to try to go build this on their own?
That credit union is probably smart enough and probably has enough money to go out and buy some stuff.
Absolutely.
So
I would agree.
$2 billion, though, you still have and it could be that's why you talk about bigger than that. You still have some bandwidth issues. What executive is going to run this project internally?
Oh, yeah.
And does this executive have the bandwidth to do it, the intelligence to do it? You get up $5 billion. There's always someone who could do it. It's
yeah. I think you just need to find this is where the right partner helps. You need to find somebody that you're going to that because the internal credit union executive should be really thinking about their members and how this is going to enhance the member experience and the member value and how it's going to help the team, supporting those members. The partner should be able to bring you the options and the expertise and guide you to the pros and cons of each choice and letting the executive decide that. The executives don't need to be, experts in all of these fields because that's why you went out and found a partner. They need to be experts in how you're going to do the right thing for your credit union and your members. And I think sometimes they get lost in that the executive tries to become the expert in all the things the partner's bringing. And I don't know if that's the best use because it's hard to find someone that's really good mix of technology expertise, member behavior expertise, business processes, and then how to run and optimize a credit union. That's a hard combo. Yeah, just some thoughts on that.
No, the thing that's happened in credit unions, and you've lived through this, I'm sure, is every executive in a credit union now has to have some fluency in technology. Mm-hmm. And the level of fluency, the demand goes up and up and up and up. And you don't have to be a propeller head. I'm not a propeller head, but I can talk propeller head. And I can follow a propeller head conversation. That's all you really need, I think. And that's even better for the propeller heads doing the work because I'm unlikely to try to meddle. Do it this way, Mac. I know better.
I do think that there is the partnership between the tech folks, and the tech folks is a broad generalization. There's all kinds of disciplines inside that, but there's some people that are on the business side, and there's some people that are really good at understanding members and how they're thinking. This is back to a topic you brought up, a couple topics ago. Those folks are going to need to be incorporated into how you're using all this technology. Most of the time, we're ignoring the folks that can represent the view of the members. And I think this is why a lot of these things don't connect, because the people in the room are thinking like, financial institution people, right? They don't understand that there are people who are going to think really different about this than you do internally. And that's why you need to bring in some people with those alternative perspectives. I think that they're missing a lot of times from these projects because it doesn't seem rational that you would need the emotional, irrational kind of perspective involved. But you do, because that's who the members are.
Well, to me, a classic failure to understand members is when 20 years ago or so, a lot of credit unions and most banks rolled out personal financial management tools, PFMs.
Yep.
And about a year later, they all asked the same question: how come no one's using this? And the reason is that I would say the better question is, how come no one really flosses their teeth every day?
Yeah.
It's time consuming. It seems kind of pointless, and you don't really see the benefit. Well, that's the same reasons people aren't using those PFMs. It's and now they've tried to gamify them, et cetera, et cetera. I think there's a bit more pickup than there was initially. I mean, back initially, it was, oh, wow, this is as much fun as using Quicken. So, but again, comes back to your core point. It's not understanding member psychology and thinking, hey, these are people just like me. No, they none of these people have ever used a slide rule.
Yeah.
They don't even know what a pocket calculator is, and the younger generation doesn't even know what a check register is.
Correct.
So you got to try
to
to think
use
like
a check until they need one, and then all of a sudden, what are these checks?
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey. Again, that's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.